I don't think I've had anything from Liga Bravado, to be fair.
Oh, dude, you got to just one day, just treat yourself, man. Just go get like a number 9 and a T52. Those are 2 of my favorites.
All right.
Ever.
I'll see what Kim's up to these days.
Yeah, exactly. Yeah, hit her up. She definitely, she's got the goods. But the Year of the Rat, man, I'm telling you, that is just you also have to be careful too. Sorry to just turn on a dime, but you also have to be careful because that's a strong cigar. And if you smoke that on an empty stomach, I mean, I feel like
you get the shakes.
You're gonna get the shakes, and if you get in a car, you might get cited for a DWI.
Okay, I will bear that in mind for the next time I need to treat myself.
Yes, exactly. Life is too short to not treat yourself. Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, 2 bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy. And here we go. Welcome back to yet another presentation of Drunkenomics. This is the drinking podcast with an economics problem. So glad you all can join us. Hopefully you have a nice stiff one in front of you, unless of course you're about to drive somewhere soon. Then in that case,
wait until you get there.
Yeah, wait until you get there. Be a little bit more drunkenomical about it. Play chess, not checkers. But once again, for the, I don't know how many weeks in a row this year it's been, but I would like to welcome us all back as the less gracious host. What is the VIX at? 23?
23, 24?
23, 24. Yeah. The fact that it's under 25 is just still mind-boggling to me.
I don't understand that one either.
Yeah. I don't.
To be fair.
Whatever. Either way, what it comes down to is I'm the less gracious host. Whatever. My name is Aaron Wong, and I'm joined alongside my ever so gracious.
I guess we could say I'm always gracious, never gracious, always graceless. Who knows? But James Goldwater, the other half,
accountant.
The debit to your credit.
Yeah, the debit to my credit. Yes, well said. Well said. Congrats to you from the other side of my debit spreads or credit spreads, whatever it is. But yeah, we decided to hold off this week on recording. We're recording on Wednesday. What is it? July 27th?
27th, yeah.
Yeah. So in case, if you haven't been paying attention, the Fed came out with their decision today, or they announced their decision that they've made in the last couple of days, because that's how long they
they have a several days meeting.
Yeah. And thank God nothing was leaked. Unlike last time.
Finally.
It wasn't a leak, but I don't think there needed to be a leak because there was no surprise. 75 basis points today.
Necessary. Maybe low.
Well, we said 2 weeks ago, based on the data that we saw in June with the labor market the way it is, I guess maybe the labor market wasn't necessarily a reason to raise it by 100 basis points, but the labor market wasn't that weak. I mean, they're still pretty strong.
The labor market was strong, and if we conclude that that's affecting the demand side of things, that we need to ease back. We need to try and slow demand.
But on top of that, it was the labor market was strong. On the flip side of that, inflation numbers, we thought it was going to peak in June. We thought that the previous rate hikes were actually working. We had a strong dollar index, but that's because the rest of the world has its own problems. Yeah.
Hey, buddy.
So, yeah. Hey, buddy is right.
I mean, let's just put it this way. I need to clarify one thing, and it may inform why there's so much dollar strength. You definitely don't want to have your money in a Chinese bank, especially a Chinese regional bank. So when I said last week, we talked about how there's $200 million in one of the banks. That was true. The sum total in all of the banks was about $6 billion.
Yeah.
That's now disappeared.
But that information kind of came later on because last week, the data that we saw was like, what, $250 billion or something like that? Or excuse me, $250 million was what was stuck in the bank. That was based on last week's data. That's what we had.
Yeah, from what I saw, it was somewhere between, it was in one bank, 200 million. I kind of assumed it was maybe $500 million. Across the board, but I figure we'll look at one specific bank with more detail, with more information coming out. We realize, no, it's 4 banks, about $6 billion. That more clarification. The Chinese government was actively changing the QR codes for people that were investors that were customers of the bank, depositors at the bank.
Wow, what a surprise! This is my surprise.
And it did that for several thousand people that were trying to go and confront the bank. And then, of course, it sent the tanks. So, it's...
But either way, like, the main point of last week's thing when we talked about this was $270 million or $500 million, whatever the figure that we said last week was. It's a drop in a hat, right?
Well,
it's nothing.
It was $200 million in one bank. Even if it's a sum total of $6 billion, in the grand scheme of things to keep your banks honest. Now you'd have to do that. Now in those 4 banks, the executives and a lot of the employees of those banks do need to go to prison for the fraud they perpetrated.
Yeah, well, we'll see. We'll see if that actually happens.
Yeah, and if they don't go, then we know that essentially the Chinese government is gone. We knew.
Yeah, but the thing is, either way, it's a drop of a hat. Like $500 million, it's a drop of a hat for the Chinese government. For the consumers, not necessarily. I mean, that's a big chunk of money. But scale it up to $6 billion, that's huge on the consumer. Still, really, if you think about it, a drop of a hat for the Chinese government. If
that's all it costs to keep your banks, to keep people trusting your banks,
then why don't you just return the money?
A good choice. Like, if you're going to stand on principle here, and again, we're going to be at that weird point where the Chinese Communist Party is being somehow more capitalistic than the U.S. government, which is to say that they're saying no, they're not going to backstop it. People have to learn, and that's amazing that they're going to stand up to that moral hazard. But at the same time, I don't know if it necessarily behooves them to do so.
Yeah, well, I mean, I don't like the thing is, I mean, that would be very much like a free market take, but at the same time, it's like capitalism. The core belief is that you wouldn't rip off somebody else. Like that's kind of like the assumption of capitalism.
Yeah, one assumption is that everyone's honest.
Yeah, which is, I mean, let's be honest.
A really bad idea of like how capitalism actually works. But yeah, no,
right. I mean, but capital, in my opinion, it does work. Capitalism does work.
No, it does. What I'm saying is the idea that no one's out there stealing. Absolutely. Right. I mean, we know one of them by name, Ponzi.
Right. Which is why we need regulations to keep the Bernie Madoffs out of, to keep them away from doing whatever they want to do. So I get it, but like to me, I still look at the Chinese bank protest. I still think it's. I don't want to say it's funny because a lot of people are getting hurt by it. So that part isn't funny, but I think it's just the realization that China can't be trusted, and we're sitting here, in very much a Western civilization, and we're going like, how did you not know that?
It's very much it's that one scene from like the John Mulaney Standard. It's like, now you're getting it.
Yeah. But at the same time, like if I was born and raised in China, which, thank God my parents migrated to the States, but if I was born and raised in China, there's no reason for me to have any sort of distrust until now. I guess really until last year when they started doing all those crackdowns. But
we could just say you dodged that bullet.
Yeah, but now it hasn't gotten any better. So yeah, I mean that's the follow up to that story. Have you heard anything else about that?
Not really. It's just a bunch of things kind of just filling in blanks on that or filling in kind of empty space where I was just like, so the primary shareholder in all 4 of those banks was a single business that convinced the banks to make it every time the person deposited money in the bank in those kinds of accounts, they didn't get deposited into those bank accounts. They got deposited into the shareholders' bank accounts, which is fraud. And then
that's like what Stratton Oakmont did.
Yeah, that's just blatant theft at that point. Then on top of that, those regional banks in question were saying things like, so they were representing to the customers in the advertising and everything else that these were legitimate accounts that would be backstopped in the event of a failure. But instead, they were actually, what they told the Chinese government was, no, these are securities accounts. These are investment accounts. Well, see, they're not backed by that. So the Chinese government's going, well, the bank told us they weren't just a standard deposit account, and we believed them. And it's like, wait, but that's ridiculous. Beijing, you believe the people that are also telling you, well, yeah, but we just gave it to this guy with the van.
To me, that's just ludicrous because you don't open up a checking account to buy stocks or to buy securities in a checking account. It doesn't make any sense.
And that's the savings account, you have to do that. That's Chinese regulators would have had to know.
Yeah. So, and I think, like you said earlier with the deployment of tanks, I think it's very much the CCP just admitting, yep, we knew the whole time.
Yeah.
And guess what? Come and take it.
Molon Lave. Yeah, no, it's not going to happen.
Molon Lave, yeah. So, yeah, but I guess moving on further west, nothing in Europe seems to have gotten any better.
Oh, no, it's somehow gotten worse.
Well, yeah, the EU, because they had a deal with, or they just agreed to a deal with Azerbaijan. I don't really know that much about how much nat gas Azerbaijan actually produces. As you can tell, I hardly even know how to say Azerbaijan. But the EU has deployed some sort of mandatory rationing on nat gas. That's what it's come down to.
Yeah, so they've signed an agreement that, in theory, is going to help them get through the winter. So it's rationing of natural gas starting in August. So starting in a week, starting next week.
A week, in 4 days.
Yeah, so they're going to start. They'll start rationing, and I think it's a reduction of consumption by 15%.
Well, the funny thing is, because a lot of what caused nat gas shortage, Russia and Ukraine was the big one. That's by far and beyond the biggest reason. But a lot of it also is part of, I think, is some of the green, the EU trying to be a little bit more environmentally conscious. So that I think has kind of turned on its head because a lot of people in Europe are cutting down trees to stockpile wood for the winter.
Well,
so,
it's that, and then you have people who they're turning the coal back on. So there's definitely going to be some negative repercussion. I was looking at, if we want to look at German natural gas specifically, because certain countries have been totally cut off from natural gas at this point. Finland is one of them. Now, Finland only gets about 2% of its energy natural gas sources. So that doesn't necessarily, a 2% loss of energy source is substantially less bad than, say, Germany, who get approximately 23.7, so nearly 24% of their natural gas, of their energy from natural gas. Now, if they get,
which is, but isn't most of their natural mostly from Russia?
Yeah, so the single largest supplier of natural gas to Germany is Russia.
Or was Russia.
Was Russia. So Russia, it's about 32% of German natural gas came from Russia. They're down to 20% of that. So they're getting about 6.5% versus that 32. So their natural gas, which was 24%, they're now missing out on 80% of a third.
Wow, okay, wow, you did that math pretty fast.
So 80% of a third. So
80% of a third is, it's
they're down 20. They're down 28% of their natural gas of what they'd be getting in natural gas usually, 28%. So they're missing 26.5% of their natural gas supply.
Yeah.
Now the next problem is about 22% of their natural gas comes from domestic storage, and their storage has decreased substantially as they've gone.
It's kind of like the Strategic Petroleum Reserve here in the U.S.
Absolutely. But, so they get where they'll probably be safe on supplies is from the Netherlands and from Norway. But I'm willing to bet that the Czech Republic is also, their pipeline from the Czech Republic is also Russia exposure. So it's really they're going to be hurting for energy even with a 15% reduction everywhere.
So not only do they have nat gas, like a nat gas supply shortage, but on top of that, food shortage, a central bank there that has finally gotten in the game. Yeah, Earth 2, Christine.
I think she's doing her best. I think she's just. I think Europe's sitting here going, why is it always us? And I feel like somewhere in some administrations from the last 25 to 30 years, there will be U.S. officials going, we warned you. We warned you. Dependence on that man specifically and that country was a bad idea. We told you that you needed to diversify.
I think everybody's been doing that. The thing is, it's easier now to look back and say, I told you so.
Oh, of course.
But at the time, I'm sure the access to Russian nat gas was super easy, extremely cheap to import. I don't necessarily think Russia's economy, I don't think they were in a position to say no to the EU when it came to exporting natural gas.
No, absolutely not.
Their economy has been super weak.
No, that's not what I'm saying. What I'm saying is there was this. I know. It was like you need to have excess capacity in case, because that's a admin.
Well, it just seems like. But I'm saying prior to the Russia-Ukraine war,
he invaded Georgia in the early 2000s, and he's been invading his neighbors for 20 years. It's not. This isn't like a. It'd be like if after Gulf War Part 1, like Saudi Arabia was like, you know what? Let's really make our economy dependent on Iraq. It's one of those things which is like, what? He just invaded Kuwait, and we had to kick him out because he thought he was going to invade you too.
Right, but
we know
I
that.
feel like just looking at it economically at the time, I'm not trying to defend anybody.
No. There are definitely economic reasons for it.
Right. What I'm trying to say is okay, Russia is willing to export nat gas for cheap because their economy sucks, and it's a win-win for Russia too.
And then but then our companies get to exploit the nat gas, get in there and exploit the nat gas. So some of that profit becomes profit for our companies here. Also, they're buying their turbines from us. They're buying a lot of their material from us. It creates maintenance workers that are employed in our country. Yeah, no, I'm not saying there aren't economic benefits, but it's
exactly.
It's very much like allowing the semiconductors to go offshore out of the U.S. It's like, it made sense at the time.
Nice.
However, there is a long-term implication, and as we're seeing, we're getting there.
Exactly. So, that's a great transition, man. I'm really proud of you as I'm transitioning from beer to whiskey, which apparently going from beer to liquor is not a good idea, but why not?
Yeah, what do you get?
Snickers, dude. How bad could it be?
You're gold.
Thank you.
You should be gold.
I appreciate it. And so should our semiconductors. Actually, no, gold is too expensive.
Well, they're going to get, 52 billion, 53 billion?
Yeah,
they'll be okay.
Yeah, I think they'll be okay. But the thing is, originally at the time, it was kind of like anything else, right? With globalization.
Well, so you saw the economic reasons. You saw NVIDIA and all these American companies that were both designers and fabricators spin off their fabrication, move their fabrication offshore because it was cheaper and it was more efficient, and they could be very profitable.
Yeah, but that's that's globalization in a nutshell, right?
Absolutely.
It's not just semiconductors. That was with everything.
Yeah,
Nike.
There was really only one American company, one major American company that's publicly traded that never never spun off its foundry operations.
Which one was that? Intel?
It's Intel.
Okay,
Intel.
That's what I thought, yeah.
So Intel kept their foundry operations. They just allowed a lot of it to go overseas, but they kept manufacturing and they kept it in-house, which is why they're set to be the American company that really reaps the benefits here.
Yeah, exactly. So with the passing of this bill, semiconductor stocks shot up. There was a little bit of insider trading stuff with senators. I don't want to get too deep into that story.
There always is.
There always is. Someone got indicted. I don't want to go into that story either, but someone got indicted, I think, or is going to have to face some sort of questioning. But we'll talk about that later. But yeah, this passed. I think it's a good initiative, to be honest with you. And you know me, I've been critical of this administration. I've been critical of pretty much every administration. So, this one's not left alone. But yeah, they're onshoring semiconductors, which could make it more expensive because granted, labor in the U.S. is more expensive. Materials in the U.S. are more expensive. But I think it's just where we could save on the other end is just
a surety of supply.
Whenever
is what you get
exactly.
There.
And then when you have what's going on now in California, which is all the longshoremen, there's a bunch of people that work in ports in California that are protesting.
Yeah, they're going on strike because they don't necessarily like the their contracts they've gotten the way they're being treated for labor purposes.
So, but when there's that problem, it makes things like semiconductors more expensive. So if you kind of alleviate that problem by onshoring the production of
by bringing a lot of this manufacturing back home, it really secures the supply.
Yeah,
and it's
very much a de-risking move. You're spending money to de-risk from that.
Yeah,
right.
You move yourself away from geopolitical concerns about being in Taiwan. You're moving yourself away from economic concerns with port authorities, shipping companies, energy costs of that shipping even.
Yeah,
it's certainly a smart move.
Yeah,
and if you can get $52 billion if you can get a taste of the $52 billion from the U.S. government to do that, now it's just gravy, baby.
Exactly. So, I think it's good, but we'll see. Right now, I don't necessarily think spending money is the best. I don't think this is the best time to spend money. But we're also, I think, in a recession, so it's kind of weird. It's stagflation, recession, shrinkflation. Inflation makes it tough for us to spend money, but recession is like, okay, spending money wouldn't be the worst thing in the world.
I would say that in this case, because it is so targeted, the spending, it really shouldn't affect inflation as a whole. It's not a broad payout. It's a very focused on an industry.
Yeah, but the thing is, as you and I both know, it can be a broad payout, right? Because what are they going to do with the $52 billion? They're not just it's not just going to get spent and disappear. It's going to get spent on labor.
Yes.
What's going to happen when it gets spent on labor?
It's going to get spent on labor in Arizona. It's going to get spent on
Ohio,
building materials in Arizona and Ohio as well.
Some in Texas. But what I'm saying is, like, when they spend that money, it goes into other places. Of course. And then they spend it. So that's why I'm saying, like, it's not necessarily like
it will spread.
It is targeted.
But what I'm saying is it's not just the free money of like COVID era or low interest rate. It's like these specific industries, and we know where it's going to start being spent. We don't know where it'll end.
And it's like the $52 billion is going to get deployed tomorrow, right? It's going to get deployed slowly over time.
Yeah, it'll be in chunks over a period. It won't be all tomorrow.
Yeah. Speaking of cost of capital, this is probably a pretty poor transition, but the big news for the week is the Fed decided to raise interest rates by 75 basis points. Yeah, but
we know that it's going to affect the demand for money, the demand for capital.
But my thing is, I'm really shocked by the market reaction from this, because the initial market reaction was great. This is fantastic. Let's buy every stock in sight. And I'm just I just don't understand why. So the announcement of more expensive cost of capital
has had a positive effect. And I think the only reason for that is you're right. From a purely economic perspective, it doesn't. Except when you take the human factor of this. I think all of today's buying was people looking and going, okay, the Fed is serious. The Fed is doing something. Maybe this time they'll get ahead and they'll curb inflation. Now, I think that's extremely optimistic because What they should be waiting for is tomorrow's news.
Right. But
GDP numbers.
Yeah, exactly. But I also think the reason why the markets went up too was whenever the Fed does something that's expected,
no one panics.
Yeah, no one panics. But if they do something that's unexpected, but less frugal, then the markets shoot up. And if they do something that is unexpected but really tightens monetary supply, the markets panic.
Yeah,
VIX shoots
it
up.
is a really interesting thing. Like if the Fed comes out and suddenly decides that it's going to lower rates, markets go nuts and they love it. The Fed comes out and decides they're going to raise rates. Just the news that they're going to raise rates cause markets to usually go down. Yeah. This time around, I think it's that they know rates have to go up. The Fed didn't increase, didn't decrease.
Yeah, but I think the markets have spent a lot of time pricing it in. Okay, what happens if interest rates go up by 75 basis points? I think that was already priced in. And I think that's why there was a little bit of buying, but we'll see. I mean, I don't know. The last two times the Fed announced whatever their rate decision was, the market shot up. The next day, it cratered.
Yeah, it's also people come to their senses and go, wait, why were we so excited about yesterday again?
Yeah, exactly. Because that's what they should be doing. Like, I don't know why there's any excitement to begin with, but whatever. I mean, I trust the markets a little bit more than the Fed, and that's just
They did what we expected them to do. Yeah. All right, let's go.
Yeah. So tomorrow, the big thing is GDP numbers come out early in the morning. I think at 8:30 a.m.
8:30 Eastern, yeah.
Yeah. I mean, ask anybody. You watch CNBC for 2 seconds, and some analyst is up there saying, yeah, we're in the middle of a recession. Doesn't mean that the markets can't go up by the end of the year. There's bull catalysts, there's bear catalysts, but everybody seems to be on board that we're in the middle of a recession. And I think tomorrow we're officially going to be
tomorrow's when we hit the 2 quarters of consistent negative growth. And that's when they can say, okay, we're in it. And we've been in it for 6 months, right? Because that's how that works. It's very much one of those things where it's kind of like the Titanic. It's all right. We hit an iceberg a while ago. Is it sinking the ship? I don't know. Well, I'll let you know a little bit, and then a little bit later, it's we're sinking. We're taking on water.
We're going down. Yeah, there's a lot of water in the bottom decks or whatever it is.
It's not good down there.
Don't go down there. But I don't know. Ignorance is bliss. I wish I was ignorant on this subject matter, but at the same time, to my knowledge, a recession has always been 2 consecutive quarters of negative GDP growth. And for some reason, I know the last time I looked up the NBER, which is the National Bureau of Economic Research, the last time I looked it up, which is earlier this year, it was in February of this year, not last week. But in February of this year, the NBER said, well, a recession is pretty much whenever we say it is. And I did an article on LinkedIn about this on our blog and everything.
I think it's because the NBER is willing to say, we can declare a recession early if it is very clear that we are in recession.
Yeah, like COVID. COVID was not 2 consecutive quarters of negative GDP growth because it was 1 very negative quarter. And it's okay, well, after that quarter,
we're going to declare a recession because it's going to take a long time to dig out of that hole. Yeah. With what's going to happen tomorrow, and I kind of hate it because I saw that the White House put out a memo or some press release. It was
it was a blog post. It was a whitehouse.gov blog.
Well, it was one of those dumb ones, and it's one of those things where it's just because there's 2 consecutive quarters of negative GDP growth doesn't mean we're in a recession. Okay, no, that's exactly what it means.
Yes,
the recession is almost certainly not. It is not the fault of this White House. It is not the fault of the last. Well, it is not specifically the fault of the last White House. It's not the fault of the White House before that.
Well, I'll say this.
They all helped.
There you go.
Is what I can say.
Exactly. That's exactly what I was going to say. It's not the fault of any one of these last 3 administrations, but I don't think any of these administrations are innocent when it comes to the reason why we're in this recession right now.
Yeah, and no one's innocent. It's just degrees of guilt here.
Yeah, exactly. Exactly. It's just degrees of guilt. Who's more guilty, who's not more guilty. I don't really want to decipher.
No, and I don't want to either.
But, I think the whitehouse.gov, what they did was very much political positioning. Do I like it? No, but I don't blame them for it because it's politics. That's the game you have to play.
Yeah.
So, basically they said, just because we have 2 quarters of negative GDP growth doesn't mean we're in a recession. But I think everything, when you look at the yield curve, when you look at consumer sentiment, when you look at the housing market, QT, supply chain woes, there's so many reasons why we are, I think, in a recession.
Oh, absolutely.
But if the NBER, which apparently a recession nowadays is just whenever the NBER says we're in a recession. That's literally that's what it is now.
I think they're going to have to. I think they're going to have to declare tomorrow that there is one. If we get that second negative, quarter of negative, if they don't, then it's very much one of those things where it's okay, well, you're now no longer a barometer that's useful.
Yeah, exactly.
And you don't trustworthy. And you don't want to give it up. If you're the pole position, you don't want to give up your
credibility. But at the same time, but at the same time, it's okay, if it walks like a duck, if it quacks like a duck, If it smells like a duck, you know where I'm going with this.
Goose.
It's duck. All right, Iceman.
I'll take it.
But I'm just saying, it's to me that I think if the NBER says tomorrow that even after this report, this GDP report, we're still not in a recession, I think it's really just a sign of how not credible of either one, the system is not credible, or two, they think we're idiots. Or both.
Yeah, and in many ways it's worse when they start to act like you don't know better, because then it's like I'm just going to stop paying attention to you, and that's when it becomes worse, because instead of being able to look for one to see like, is this bad? Now you've got 5 different, 5 to 10 different banks and banking groups going, oh yeah, this is a recession, or we entered the recession about 3 months ago when we started selling all that crap to you. Oh yeah, you thought we were selling you all this really cheap because times were great. No, it was recession.
No.
We need to be right by our shareholders.
We need to find a greater fool. Yeah. Or do
now
that.
We can tell you.
Yeah. But the thing is, I mean, everybody's saying it's recession. I mean, journalists, Wall Street analysts, the broader markets are saying it's a recession. I've been looking at put call ratios all day, and everything is like 14, 15. The SPY put call ratio was like 2 at one point today. I mean, it was insane. So I think everybody's bracing for some sort of downturn. And to be honest with you, I don't necessarily trust the markets, like I said earlier, but I trust the markets a lot more than someone that says, hey, we're not in a recession when it's walking like a duck, quacking like a duck.
Absolutely.
Smells like a duck.
No, you're absolutely not wrong there. And I don't think anyone's going to see tomorrow and be like, oh yeah, it's going to be fine. I think you're going to, I mean, I'll see this a little bit. I think we're going to see the Asian markets really start to take a slide into red. I think we're going to wake up to Europe. I'm going to go to bed as Europe's really kind of sliding into red, looking at US markets going, well, they're probably going to have a really bad day tomorrow. Let's put it this way: if we need no other reason to underscore that today's markets closing up was just indicative of mania and a deep breath before a plunge of stuff that doesn't make sense. Meta declared for the first time, even when it was Facebook, that its revenues were down. And down like not an insignificant amount.
No,
26%.
I forget. Yeah, it was something about a fourth. Yeah,
it was 26%,
or third or fourth.
And they said and they still closed up 6%.
Well, they closed up 6%, but the earnings came out in the after hours. But it's still up. I think last I saw, they were still up from open. Right, they opened at like 162ish, 162 and change, and I think they closed. Or they finished in the after hours. Oh, they finished in the after hours at 161. So they actually did go down a little bit. I didn't really watch the last 2 hours of the extended session. So
they finally, because when I was looking at them a while ago, they were still up. But then
they were up. I mean, last time I saw, when I clocked out, it was about 2 hours left in the extended session. They were still up from when they opened, and they were at like 164ish, 163, 164ish. So. Yeah, I don't understand what's going on, but I mean, now the Dow futures are pointing a little bit lower. They're pointing towards the lower open in tomorrow morning. We'll see what GDP numbers look like. Obviously, there is still a chance, if this does happen, I mean, call me a clown, call me whatever you want, but like there is still a chance that GDP numbers come in positive. GDP growth comes in positive.
It is highly possible, but I do not think it likely. And that's just because there is not enough supply of goods. There is not too much demand and too much use of money. So you've got two things just driving inflation in a way that's not sustainable. And because of that, I think you've just got too much money being spent on not enough stuff. Which you can have a nominal GDP that you can't have real GDP growth at that point.
Even then, I'd be hard pressed to believe that nominal GDP is going up, because if you look at everything that's going on,
I would also agree with that.
Every big company is cutting back. Yeah, exactly. But every big company is cutting back on hiring. They're cutting back on investments, on capex. Everything is pointing towards a recession.
Yeah.
So
and not to mention sentiment.
Like the earnings were weak. Like the earnings were weak this week. Like they weren't good. And that's after they revised down 2 months ago or a month ago. Like people are still missing expectations. Stock market is still going up for some reason, which just, to me, it just blows my mind. And, and the White House is still saying, and the Fed is still saying.
And despite a change in the resident, there's still, it's still bullshit coming out the.
Exactly. Thank you, Charlie Munger. So I don't know. Who knows what can happen if GDP growth comes in positive tomorrow? I don't know. I'll be the first to say that I'm the biggest idiot that ever walked the face of the earth.
And I'll be the second to say Aaron's the biggest idiot to ever walk the face of the earth.
Thanks, man.
And the first to say I was right there with him.
And I'll be the second to say that. So you said so too, man. So, but yeah, I mean, we'll see. We'll see what happens tomorrow. But with that said,
I have to cut and run, but I'm going to drop it like this, and it's going to go. But if you want to do your part to try and keep the GDP positive, look no further than drunkenomics.myspreadshop.com, where you can help consume.
Exactly.
And when that consumption, 70% of GDP is out of the way, right?
Yes, exactly. So, I mean, we all know that consumption is 70% of the economy or something like that.
Absolutely,
so,
in the US at least.
Yeah, so, I mean, do your part if you can. All of it is seriously really greatly appreciated. The fact that you're listening and you're drinking with us is also
really cool.
Greatly appreciated. But yeah,
Drunkenomics.myspreadshop.com. And I will say, Christian, that is a sweet buy. I've always looked at that beer holster and I've wanted it, and I'm like, So you're gonna have to let us know how that goes. If you want to know what we're talking about and who we're talking about, you got to get into the Discord, the Drunkenomics Discord. And the only way to do that's with an invite. And to find that invite, check us out on the aforementioned Meta on Twitter at Drunkenomical, DRUNKENOICAL.
Wow, dude, that was amazing. I think you nailed it too. Yeah, I don't need to say anything after that. But yes, you can. That's us on every single platform out there, except for LinkedIn. LinkedIn is just Drunkenomics.
Or one of us by name. And then
join Discord, free to all, and from there, if you want to help us, I'm running really low on bourbon right now. My own fault, but if you want to help us,
you did do it to yourself.
Yeah, I did do it to myself. I like a glass of bourbon. Sue me. But if you want to help me restock, or if you want to help James restock, you can always find us on Patreon. It's patreon.com/drunkenomics, DRUNKENOMICS. That's where you can help us keep the fruit stored.
Keep the fruit present, peels peeled, the ice frozen. Whiskey stones cold, and the
exactly,
and liquor cabinet stock.
Yeah, seriously, like I said,
for lack of better terms, it's the way you can help to keep us in good spirits.
Literally in good spirits. Yeah, I love it. But seriously, thank you all so much for joining us. I'm sorry to keep this episode short, but next week's gonna be the big one. Next week's gonna be our response to
everything,
GDP stuff.
And we'll be discussing that. So the GDP news. We'll be discussing what I have to assume will be the emergency August Fed meeting.
In Jackson Hole. So but with that said, seriously, thank you so much for filling and killing with us. Thank you so much for playing Chestnut Checkers all week. I really appreciate all you guys. I think I speak for James too. This is always a highlight of my week.
It is definitely one of them. It is definitely one of the things I look forward to.
Yeah. So with that said, continue to do all that. Play Chestnut Checkers. Don't brag. Just say whatever our slogans are. But most importantly, please
just keep it drunkenomical.
Wait, one last sip. Hold on. Now, cheers.
Cheers.